What if I told you that right now, while you're watching this video, there are people earning money in their sleep, not through schemes or lottery wins, but through strategic asset ownership? Today, I'm breaking down the 5 proven assets that can gradually replace your paycheck and buy back your time. Stick around because asset number 5 is the multiplier. Without it, the other 4 stay slow. And if you want more content on building real wealth, hit that subscribe button and turn on notifications so you never miss out. Here's the harsh truth. Trading time for money has a ceiling. There are only 24 hours in a day and you can only work so many of them. But assets work around the clock. They don't need sleep, vacations, or sick days. The wealthy understand this principle deeply. They build income-producing assets while everyone else chases the next paycheck. The goal isn't to get rich overnight. It's to systematically build these assets over time until they generate enough cash flow to cover your expenses. Let's dive into the 5 assets that can make this happen. Quick reset. Here's how we'll keep score across the 5 assets. Income potential, scalability, risk, and effort required. Watch for the star ratings. Higher stars mean faster progress. Ready? Asset number 1 is up next. Let's move. Asset 1, dividend-paying stocks, dashboard loading, ratings incoming, momentum on. Asset number 1, dividend-paying stocks. When you buy shares in a dividend-paying company, you're becoming a partial owner of that business. Companies like Coca-Cola, Johnson & Johnson, and Procter & Gamble share their profits with shareholders every quarter. The math is simple. A $100,000 portfolio yielding 4% annually generates $4,000 per year, or about $333 per month. But here's the beautiful part. You don't need $100,000 to start. Begin with just a few $100s and use dividend reinvestment. Those dividends automatically buy more shares, which generate more dividends. Start with $5,000 and add $300 monthly while reinvesting at 7% average return. After 20 years, you could have over $170,000 generating approximately $6,800 per year. This is for educational purposes only. Past performance doesn't guarantee future results. The mistake most people make? Chasing high yields from unstable companies. Focus on dividend aristocrats. Companies that have increased dividends for at least 25 consecutive years. Start small, reinvest everything, focus on stability over sexy returns. But there's one asset that gives you 4 profit sources at once. Keep watching. Quick recap. Start with quality dividend payers, reinvest automatically, and stay consistent. Focus on stability over flashy yields, and let compounding do the heavy lifting. We're building cash flow first, then scaling with discipline. Up next, the 4-way profit engine that accelerates everything. Keep rolling. Asset 2, rental real estate. Stars filling as the 4 profit streams come online. Asset number 2, rental real estate. This is the 4-way profit machine. Rental income, appreciation, mortgage paydown, and tax advantages depending on your location. Every month, tenants pay rent. After expenses, you keep the cash flow. Meanwhile, the property appreciates historically around 3 to 5% annually. Tenants pay down your mortgage building equity, and many countries offer tax deductions on mortgage interest, repairs, and depreciation, though tax benefits vary significantly by jurisdiction. A $250,000 property with $50,000 down, renting for $2,000 monthly. Mortgage payment, $1,200. Other expenses, $500. That leaves $300 monthly cash flow, $3,600 annually. That's a 7.2% return on your $50,000 before appreciation or equity buildup. Can't afford a whole property? Consider house hacking. Buy a duplex, live in one unit, rent the other. Or explore REITs, real estate investment trusts, starting with just a few $100s. The mistake? Underestimating vacancy, maintenance, and management costs. Always budget for 20-30% expense buffer. Real estate requires capital and work, but it's one of the few assets where other people literally pay your mortgage. In a moment, I'll show you the one mistake that makes asset number 3 fail for 90% of people who try it. Before we shift gears, remember, conservative numbers win. Budget for vacancies and maintenance and protect cash flow. With that foundation set, we transition into a high-leverage digital play you can start today. Stay with me. Asset 3, online businesses and digital products. The scoreboard lights up for scale. Asset number 3, online businesses and digital products. We're talking courses, ebooks, software, templates, membership sites, anything digital that solves a problem. You create the asset once, it sells forever. Write an ebook once, thousands of copies. Record a course once, thousands of students. One creation, infinite scale. Create one course in your area of expertise. Price it at $97. Sell 20 per month through automated marketing. That's $1,140 monthly. After initial creation, maintenance is just a few hours monthly. Build a membership site at $29 monthly. Get 200 members, that's $5,800 in recurring revenue. You can also monetize through YouTube ad revenue, blog affiliate marketing, or podcast sponsorships. Here's the mistake 90% make. They build the product first, then try to find customers. Wrong. Validate demand first. Build an audience, ask what they need, then create it. Build backwards from the customer. Digital products take serious upfront work, but once built, they're the most scalable asset on this list. Asset number 4 is the most hands-off strategy here, and the data behind it might surprise you. Here's the rhythm. Validate demand. First, then, build. Use audience feedback. Iterate quickly, and automate delivery. Keep margins high, track churn, and reinvest into growth. When the flywheel spins, we channel profits into diversified low-effort exposure. Coming up next. Asset 4. Index funds and ETFs. Set it and forget it diversification engaged. Asset number 4. Index funds and ETFs. Instead of picking individual stocks, you buy a tiny piece of hundreds or thousands of companies at once. One investment, instant diversification. Historically, broad market indexes have shown strong long-term growth. While nothing is guaranteed and there are certainly down years over extended periods, patient investors have generally been rewarded. This is educational information only, not investment advice. Invest $500 monthly starting at age 30. Assuming historical average returns continue, which again isn't guaranteed, by age 60 you could have substantial wealth. You can use the 4% withdrawal rule for living expenses without touching the principal. Most index funds charge under 0.1% in fees. That's just $10 per year for every $10,000 invested. Compare that to actively managed funds at 1% or more, and over decades, low fees save you hundreds of thousands. The mistake: panicking and selling during crashes. Markets drop, it's painful, but historically, those who stayed invested through downturns recovered and thrived. This is the ultimate set-it-and-forget-it strategy. Invest consistently, stay diversified, and let time compound. Now, for asset number 5, the multiplier that makes everything else possible. Asset 5. Your skills and personal brand, the multiplier that speeds up every other asset. Asset number 5, your own skills and personal brand. This is the multiplier. Every other asset requires capital, but skills require time and effort, not money. And once you have high-income skills, you accelerate your acquisition of every other asset. Develop expertise in sales, copywriting, digital marketing, software development, video production, or consulting. Start freelancing at $2,000 per client monthly. Land 3 clients, that's $6,000 extra monthly, $72,000 annually. Instead of lifestyle inflation, funnel that income into the other 4 assets. Invest $3,000 monthly into stocks and index funds. Save for rental property down payments. Build your online business, or split it across multiple asset classes. Your personal brand opens doors: speaking gigs, consulting services, course sales, affiliate partnerships, sponsored content, premium memberships. Watch the timeline, learn, practice, publish, and iterate. Each milestone compounds. Skills raise income. Income buys assets. Assets buy time. The mistake? Trying to monetize before you have real expertise. Build genuine skills first. Provide massive value. The money follows. Skills and brand are recession-proof. Markets crash. Real estate drops. Businesses fail. But valuable skills stay with you forever. This is the foundation. Invest in yourself first. Generate excess capital, then deploy that capital into income-producing assets. It's a flywheel that accelerates over time. Alright, so where do you actually start? Here's the game plan. Phase 1. Build your foundation. Start with asset number 5. Invest in yourself. Develop skills. Simultaneously, start investing in index funds. Even $100 monthly. Start now. Phase 2. Generate extra income. Use your skills for freelancing, side projects, or career advancement. This extra capital is your rocket fuel. Resist lifestyle inflation. Every extra dollar goes toward building assets. Phase 3. Diversify your assets. Add dividend stocks. Research real estate markets. Plan your digital product. Build one asset, stabilize it, then add another. Phase 4. Scale and optimize, reinvest profits. Use dividend income to buy more stocks. Use rental cash flow for another property. Use course revenue for additional products. This creates exponential growth. The timeline. Be realistic. Building assets to replace full-time income is a 10 to 20 year journey for most people. Years 1 to 3 feel slow. But years 8 to 10? That's when things accelerate dramatically because all your assets work together. All 5 assets now orbit together: cash flow, growth, diversification, and scale aligning. Keep your plan simple, automated, and relentless. Quick recap next, then your game plan to execute today. So, there you have it. 5 assets that can replace your paycheck over time. 1. Dividend stocks for reliable passive income. 2. Rental real estate for multiple profit streams. 3. Online businesses for scalable revenue. 4. Index funds for hands-off wealth building. 5. Your skills and brand as the foundation multiplier. This isn't about getting rich quick, it's about consistent strategic decisions that compound over time. The best time to start was 10 years ago. The second best time is today. If you found this valuable, hit that like button. It helps share this with others who need it. Subscribe so you don't miss future content on building real wealth. Which of these 5 assets are you prioritizing first? Drop a comment below. The path to financial freedom isn't mysterious, it's methodical. Start building your assets today.